So you understand the concept of risk and reward, but you don't know what to do with your money. Here's a quick rundown of your options. In the short term, well, I define short term as anything within the next 3 years. You don't have a whole lot of time available, so you don't want to take a whole lot of risks with your money. You're really looking just at banking instruments. You're looking at savings accounts, interest-bearing checking accounts, money market accounts, and certificates of deposits, or CDs. These are all really easy investments to understand, and if you do have any questions, there's a banker that you can talk to right there. Do understand though, right now, these are paying very low amounts of interest. So I almost don't even look at them as investments. It's really just a safe spot for your money so your sister doesn't steal your cash, or in case somebody breaks into your house, they don't steal your cash that way. So the bank isn't paying a lot. Of these options, savings accounts are my favorites because you're not able to quickly access the money. CDs are also good because they pay the most amount of interest, but again, you're not making a lot of interest anyway right now. In the midterm, every guru is different. Some people will say, oh, the midterm doesn't really exist. I look at things that are anywhere from like 3 years to 10 years in the future as like a mid-range in terms of investing. If there's something that you want to buy 7 years from now, this is the type of thing you might want to consider. My personal favorite here is bond-based mutual funds. I've been teaching economics for the past 14 years, and literally every semester when I've checked out Fidelity.com, TruePrice.com, Vanguard.com, any of these mutual fund companies, all of their bond mutual funds perform almost the same. You see this steady kind of progression upwards, and they're not making huge interest, but they're consistently earning maybe 4 or 5, 6% interest every year, and that's pretty good. So you're taking a little bit more risk with your money. It's more risky than, say, a bank, but it's not crazy high risk like the stock market. Here's an example. This particular mutual fund, and again, mutual funds are bundles of an investment. It could be bundles of stock, or in this case, it's bundles of bonds, lots of bonds put together. This mutual fund has returned 4.5% average every year for the past 10 years. And that's pretty good. That's very appropriate for a mid-range type of objective with your money and your investment. If you have more than 10 years to go with your money, you're looking at an investment that is going to be working for you for a long time because the thing you want to buy is way down the road, you can start looking at higher risk types of investments, such as stocks. And even within stocks, there's a degree of risk there as well, or a range of risk rather. Let's say you buy Walmart stock. Walmart's a big company, they're not going away. It's a fairly safe investment. Is it going to go up and down? Sure. But is it going to have explosive ups and catastrophic downs with its share price? Probably not. So I would consider that a safer stock. On the other hand, if you invested in a firm such as EOG Resources, an oil drilling company, they're active in North Dakota and Texas, all over the place. If you had bought them 2 years ago, their share price is about $50. I just checked them this morning, it's $100. And so they're active with fracking, it's a new technology, they're really doing well. That's explosive growth, more risk, more reward. So that's kind of how I look at stocks, and that's a reality, two pretty good examples of how stock can be risky, but not always super risky. Those are the types of things I'd look at 10 years from now. In addition to stocks, you could also look at things like real estate, gold and silver investing, buy gold, and spam and ammunition, I guess. Currency investing, commodities trading, those long-term types of investments are much more appropriate if your time horizon for your money is 10 years or more down the road. I hope this gives you a starting point for your investments. Remember, find something that's a good fit for you. Good luck.